Hello everyone, this is John Sheely of the Weiss Center for Investor Advancement. Let's assume a trusted advisor, or perhaps through your own research, you have an interest in buying gold. This video will examine a few of the most popular methods traders and investors speculate in the price of gold. However, before I continue, I must share a few required disclosures. There is risk of loss when trading in any asset class, including stocks, options, commodities, and forex currencies. Past results are not necessarily indicative of future returns. Always consult a trusted advisor before engaging in any trading activity. Two of the most popular methods to invest in gold is through either gold futures through a commodity brokerage account or the stock exchange traded fund GLD. Let's take a closer look at these options and discuss the advantages and disadvantages of each. The biggest advantage of gold futures is the available leverage that you use in your commodity account. For example, the current original required margin for the standard 100-ounce gold contract is about $7,000 for one contract. Additional maintenance may be also required. The point is, a small deposit can control $130,000 worth of gold. However, remember that leverage can work against you just as much as it can work for you. I have two indicators in this chart which plot how much gold is moving up and down on an average day. The ATR for gold is presently over $16 a day. This bottom indicator lets you know that the daily swing is therefore over $1,600 for just one gold contract. You can see that placing a position in the futures is not for the faint of heart. Even if you had an account of $100,000 for that one gold contract, your equity would go up and down between 1.5% and 2% a day. That said, if you are seeking the largest dollar return in an investment in gold, the futures is the better option. However, many investors may not have a commodity futures account. The ETF which most closely tracks the price of gold is the Spider Gold Trust ETF, GLD. An investor can buy as little or as much shares as they desire to speculate in the price of gold. By the way, currently, if you wanted a position in GLD to have the same dollar gain or loss as one contract in gold futures, you would have needed to buy 1,400 shares. And as you can imagine, with that size of position, your average daily swing would be about $1,600. Of course, this would be about the same as that one gold futures contract. Let me summarize these two options for speculating in gold. You can deposit far fewer funds in a commodity account to buy gold futures. This is how you can maximize your available leverage. To create a similar position in stocks would require a deposit near $100,000 utilizing the traditional 2-to-1 leverage for a margin account. Another advantage of futures is that they trade around the clock. You can enter a new position or close an open position almost at any time of the day. Lastly, execution cost and brokerage fees are far less for a commodity position. The advantage of the stock ETF GLD, however, is that you have better ability to control the size and risk of your position. You can buy as little or as much as you wish to invest. This is the biggest advantage of stocks. And of course, most of you already have a stock account open, so there would be no need to go through the process of opening a new commodity account with a commodity broker. Now you may ask, what about the E-mini gold contract? This is 1/3 the size of the standard contract. Doesn't that give an investor an ability to invest in gold with a smaller dollar commitment? The answer is yes, and I show you a chart of the E-mini gold contract, which is about 1/3 the size of the full contract. The required margin deposit is obviously about 1/3 smaller than the full size 100-ounce contract as well. However, I have to share a warning about the mini contract. For some reason, it is still not as popular as the full-size contract. And the mini contract has far less daily volume. It's very thin at times. I show you a 1-minute chart on the right. You can see by those dots and small ranges that there is very little activity at many times during the day. This means you will encounter greater price slippage coming in and out of this contract. Lastly, you may ask, what about speculating in other gold stocks? I show a couple of examples, Newmont Mining and Goldcorp. As you look at these two stocks, you see that the price movements are very different. At times, the movement in prices in gold stocks can be very different than the price movement of gold bullion itself. There are many factors that affect gold stocks. They have different fundamental factors that affect their individual price. If you select a gold mining stock to invest in gold prices, you will need to make a very careful analysis of the fundamentals and technicals of that particular stock. So as a quick summary, if you've caught the gold bug and wish to invest in gold, you can place a position in the gold futures. A smaller dollar deposit is required, but you will see large equity swings in your account on a daily basis. The ETF GLD is also a consideration because you can make a much smaller or as large a dollar commitment as you wish. Finally, there's another possibility for trading and investing in gold. And of course, this is through the trading of options on either the futures or the stocks. If you want to learn more about how you can do this effectively, you might consider taking our premier course on options trading with Mark Broberg in his course, Premier Guide to Building Wealth. It is through this course that you will learn how to trade options very effectively. I hope you found this brief discussion of the different options that traders have when investing in gold very helpful. If you have more questions on this topic or any of our courses at the Weiss Center for Investor Advancement, contact us at 1-800-393-1706. This is John Sheely, and may this be the year that you invest in yourself and learn how to become a more educated investor so that you can achieve your financial goals and dreams.